Hey everybody, welcome back. Julian here from Ripehouse, and today we're going to be talking about another strategy that's involved when it comes to building out a portfolio, and that is the push and pull strategy. So if you're not familiar with that, I know the ones who have been following Ripehouse for a while will. That's where we're essentially accumulating residential assets for a period of time, so little greenhouses, and then eventually moving into that hotel. So the hotel in this case is, things like commercial assets, rooming homes, unit blocks, etc. So just want to walk people through that and what it's not really a strategy that's going to turn you to being cash flow rich overnight. It's something you need to work towards, but it's really about, acquiring those home residential assets, and where they're really powerful is you're coming in with a lot of those properties. Some instances you're purchasing them at full debt plus costs. Sometimes you might be borrowing at 90 or 80% LVR. Residential properties are really powerful for that high leverage you can incur, but they're really, really powerful to use that leverage to get capital growth. However, when it comes to, covering your costs on a rental basis, when interest rates are 2%, it's great. They're all cash flow positive predominantly. But when your interest rates are at 6%, in most cases, you're negatively geared before tax. So then what it's about using that commercial asset after you've acquired equity across your portfolio to help and come in and do the heavy lifting on the cash flow, and to walk you through a bit of an updated modeling here and a bit of an example. So in this example, just walking you through, we're looking at purchasing 4 properties at around kind of circa $500,000 over a 4-year period. We're going to purchase them at 95% LVR each time we make that purchase. So maybe the first one you do 80 or 90, you may just contribute some extra savings along the way, and we're going to run in our costings across there as well through all the outgoings, maintenance, property management fees, etc. And then later on in year 5, coming in and purchasing a commercial property, but this one at full debt. So you're just going to have to cover your purchasing costs there. And to give you a bit of an example, what the cash flow looks like here. So we can see in the early years, we're running into double-digit losses. So it's really about absorbing those losses early. And these are pre-tax numbers, I should probably profess there. So we can see in those first 4 years where, $20,000, $30,000 negatively geared in those early years. But what we can see is our wealth is building behind the scenes. So our equity has been growing year on year on year. And by the time we get to year 5, we've got about $1 million of equity behind us. Then when we transition into that commercial property, we can start to see the cash flow starts to turn. So we're slightly positively geared, and it continues to build as time goes on. And this is a strategy that's more of a long-term play. If you think this is going to be something that can get you into that cash flow state overnight, excluding if you're pumping in extra savings and income from other avenues, it's normally going to be looking at kind of somewhere between a 9 to 15 year window to make this work at a kind of a moderate pace, which most people are comfortable with. If you've got no mortgage on your home, this can be greatly accelerated. If you're purchasing multiple investment properties across your first early years, that absolutely accelerates the process as well. But we can kind of see here with this kind of modeling, in about a 12-year period, you can get very close to 6-figure passive income. But it is a pathway that requires a lot of strategic planning, working with a financial team around you to support you to get there. But it's not necessarily fit for everybody. Not everybody has that risk appetite or tolerance to take on that much debt. But I hope that one was a little bit insightful. Great to get some questions on this one, so please leave a comment below. If you like what you've seen today, please make sure you hit that subscribe button and like the video, and looking forward to catching you all in the next one. Bye for now.